Good morning, folks. Welcome to Web3 Wednesdays, where we chat through some of the complex and nuanced topics in crypto and Web3 at large so that you can stay ahead of the curve. So today I'm joined by Shaun Heng, head of Spartan Labs, which is the venture studio of Spartan Group, a prominent Web3 venture fund based in Asia. Spartan Labs aims to massively improve the time to market for exciting Web3 projects and further support a mainstream decentralized future. So before Spartan, Shaun was the VP of Growth and Ops at CoinMarketCap, where he held and led the post-M&A process with Binance, and also built a global team to scale products, demonstrating up to 50x growth in web traffic. So he's been around the block in Web3, and we are ecstatic to hear his take on the current venture environment, as well as the broader building environment within crypto. So Shaun, thanks a ton for joining us.
No, thanks, Sam. Thanks for the invite. Very excited to chat with you.
Awesome. Well, hey, just to kind of level set for the viewers, can you tell us very briefly, what do you do over at Spartan Labs?
Sure. So I think you gave a very quick, and good dive into what we do at Spartan Labs. But just for those who are not aware of, Spartan Group is actually the main group that sort of funded the venture studio model itself. It's actually one of Asia's leading digital asset and investment advisory firm. Right. So we started back in 2017, and as part of the evolution and in terms of just expanding the business model itself, we launched Labs about 3 months ago actually. Right. So we announced in the market that we launched $100 million Web3 venture studio that's led by me. And in essence, what we actually do within Spartan Labs is that we try to invent and launch breakthrough products with our full stack team of engineers, product managers, designers, marketers, builders, and some of the best entrepreneurs in the space itself. And our goal really is to be able to launch new ways of building industry leading products in Web3, and hopefully create a net positive in the whole Web3 ecosystem.
I absolutely love to hear that around the board. As someone, we build ourselves quite a bit over at Playground Labs, and it is seriously awesome to see other groups and like large firms even spinning up these entities that are just dedicated to building and moving the space forward, because that's really what we need. Okay, so then diving right into the tough meat of the question, right? So today we're going to chat a little bit about the venture environment, building in that environment, valuations, how those kinds of things all play together. So, investing in crypto ventures at a really early, stage is complex, very complex. And, Shaun, you guys have pretty decent exposure to gaming as well. And crypto gaming has an entire additional layer of serious complexity that sits on top of it. You have tokens, you have equity, you have NFTs, and those all kind of sit within the same venture. So, you either personally, that's completely fine. Just talk about your own opinions if you like. When you approach some of these gaming projects or you're thinking about building in gaming, when you're thinking around valuation, what do you think?
I mean, that's a tricky question, right? I mean, even before I joined Spartan Labs and I was back in CoinMarketCap, I did a couple of angel investments. And obviously at that point in time, XC was at its bull market. And so a lot of different game studios were spun out. A lot of different projects came about. And a lot of time is about trying to decipher which are the ones that are credible and actually building a game product versus those that's a bit more scammy and just out to raise a bunch of money and there's no product to show. So a lot of time is spent discerning the good from the bad, and definitely I think valuation it's on the high side, right? I think there were words on the street where you could just spin out a pitch deck with no product, and you let the word play to earn on it, and you can raise at $100 million valuation. I think that was actually shocking at that point in time, but it was common, right? And once you have that play to earn sort of like notion in it, a lot of more, I would say, not as savvy investors obviously fall into that trap and invested a bunch of money that obviously became, gone to zero in that sense over the past year. And so also, I think increasingly, especially during this market correction, I think game products or game projects are getting a bit more sensitized to that, and valuations obviously came down from the highs of the 100 million sort of rounds.
Yeah, I remember we were seeing some of those pitch decks, no team, no idea, literally just like, I think we're going to build this game, please, $100 million valuation. It was wild. It was crazy for a second. And it kind of speaks to the complexity of evaluating tokens versus equity. And, traditional investors and those who are newer to crypto, they tend to, have certain assumptions about how a business should function on terms of equity and how that should work. But then when you enter the token world, it's a completely different world. I mean, tokens effectively, right? Like some of them you can't mint anymore, for example, whereas equity you can iteratively dilute over and over. So we see a lot of founders, looking to sell a blend of tokens and equity. How do you kind of, see the value flow between the two? Do you have a personal preference for one or the other? What are your thoughts around that?
I definitely feel like, especially at such a nascent state in the whole ecosystem itself, many times I think investors buy token as a proxy to bet on a project, right? So I think we first have to discern for ourselves what is the definition between an equity round versus a token round. And I think a lot of projects, to your point, I think did a blend of both, right? They first raised an equity round and subsequently raised a token round, and that left a lot of investors scratching their head in terms of how do I actually value the value accrual in terms of if I have some revenue from the project that I've invested in, uh, what is that value accrual into the token versus the equity portion itself. And I think the fact is also that there are tokens with no value accrual, right? I mean, you look at Uniswap, for example, it's a governance token, and obviously, I think for the right reasons and for the wrong reasons, um, this token sort of like how do you actually quantify the value ascribed to this token other than the network effect itself? So I think that's something that is very important for investors and even like retail investors, especially to draw the distinction between equity and token. I mean, to put it very simply, equity gives rights to the cash flows and assets of the business, right? Tokens not, right? Unless they are sort of coded into the smart contract that they are meant to accrue the revenue and cash flow itself. So I think that's where really do your own research is very important in that sense to figure out what is the actual value accrual, right? So in a way, really about following your money, following the money trails and understanding where that value accrual is. I think that's very important. Personally, as an investor and as someone that's building the space itself, to me, I often advise a project, especially a very very early stage company, to not go down that token route so quickly. To me, token is an amplification engine, right? It sort of quantifies as a marketing budget for growing the user base, but that's pursuant on the fact that you've already figured out the business model to some extent, and you know that the business wouldn't pivot 100% from 180 degrees from where it was, when you first started. And many times, especially as an entrepreneur yourself, building a company at the 0 to 1 stage, there's so much iteration and so much, pivoting of the business model itself that if you are not clear what that business model is, how are you going to ascribe the right value to the token itself? So I actually advise companies to keep it simple, where you can raise an equity round, build a product, validate the idea, get traction. Once you're about to hit product market fit and you're about to scale the company, that's the point where you have more bandwidth to think about a token value accrual process itself. And that's probably where a token will make sense, not, think about it from the other perspective. Where you launch a token, then an equity just gets very confusing for everyone in that scenario.
It gets to be a mess. As soon as you introduce a concept of a token next to equity or equity next to token, and then you have this really intense split utility where the team may only hold the equity or the team may only hold the token, but they're actually selling both to investors, and investors are not neatly aligned with the team. So yeah, I totally understand where you're coming from. I think nascent teams who are initially building products and just issuing equity and then waiting and making a decision around what will a token ultimately even do besides just like issuing it and then saying, oh, you can stake the token and get more yield. I think that's great, and I think that's broadly really good advice for new projects. Then, Shaun, to make it even more complicated, right? So we have tokens, we have equities, we also have NFTs, and this is obviously very pertinent for the gaming space. A lot of times in the gaming space, right, you'll have games who sell, either their NFTs in their land or, maybe even just cosmetics or something, but there usually will be some form of NFTs introduced. Talk to me how you see, NFTs playing into that mix of value accrual, because, arguably the entity almost has to drive value to equity, to tokens, and NFTs all at the same time. And that's a complex mix, right?
It is. I myself is also confused with the entire structure itself. Right? I mean, again, I think we are back to the same conversation that the space is still very nascent at this point. It's still evolving. I think everyone's trying to figure out, and pushing the boundaries. I think that's also the beauty about Web3 in nature, right? Where it's not dictated or not decided by a few players in the ecosystem itself. Anyone in the space is allowed to try. Anyone in the space is allowed to build. Anyone in the space is allowed to experiment. So I think that's very important as a Web3 ethos of like, decentralized and allowing for rapid experimentation. But to sort of answer your question specifically around what is that value accrual to NFT projects itself, um, or the NFT assets itself, I think that's very important to again go back to fundamentals of following the cash flow. So when you mint a project or when you launch NFT project for an NFT collection for your project itself, where does the money eventually land, right? But if there's no token attached to the project itself, then obviously that value accrual goes back to the equity holders itself. I think that's very clear that we need to be discerning of, right? And obviously, I think as a project, you want to make sure you give the best value back to your users in a sense of when you launch an NFT collection itself, what is that value that users, or what is that utility that you are giving to a user? So actually separate both sets of equation, right? I mean, right now, obviously, there's a lot of speculators in the space. So everyone thinks of NFT as just a pure speculation to some extent, right? Where you are betting on the floor price getting higher and higher and higher. But at the same time, I think we're also seeing an increasing mix of NFT projects and collections that are focusing a lot more on the utility side of things. And I think that's really where the true value is, right? NFT itself is not an investment vehicle. By and large, there are a lot more utilities, and I don't think we have seen the end of what NFT is meant to be in its final form. So again, it's going back to talking to different audiences. As an investor, you want to invest in a project itself. You can do a combination of both, but don't expect the value accrual to happen on the NFT collection itself, because that's also hard to ascribe. And I think it's more around the utility of it. Right? You take Bored Ape, for example. The utility comes from that, the network effect of being able to own that IP, where that could be part of something bigger. But no one is saying that, for all the revenue that this, projects collect, I want a piece of it because I own a Bored Ape. And so the value accrual is actually very different. It's about the utility accrual of the NFT project itself.
Yeah, and that's a really careful distinction, right, between seeing value from revenue versus seeing value from social fabric and like utility that's built around it that may not be financial in nature. So it's a very, very complicated environment. And I think maybe even digging down around, this idea of on-chain utility and what all you can do on-chain, what all you can't do on-chain, because of the virtue of smart contracts, you can imagine, almost these SaaS type businesses that spring up and take revenue entirely on chain. And they could drive all that revenue, to some specific token treasury that's governed by the token holders. And that's a really, really unique proposal that you don't see in the Web2 world, and you couldn't. And so, from your perspective, what advantages or disadvantages do you see for, projects that are trying to do that are trying to lean in full Web3?
I think that again go back to how you utilize the revenue generated on chain versus off chain, right? So, if you take for example, a company that's building something and they accrue revenue through on chain mechanisms. I think that's where you could then take that same asset, stake it to a point, right? Stake it, or earn yield from it, and I think that's where a full on chain activity happens. But at the same time, you as a business owner could also decide that, hey, I want to, convert all these different um, uh, digital assets that I've accumulated from the revenue stream itself and convert it back to, fiat currency for my day-to-day operations. Again, that's also very different. So you're actually not maximizing off the yield of these digital assets. And you really think, I would sort of compare it to a value accrual back to that fiat currency itself. So even you take, Axie Infinity, for example, as a scholar, as a guild, when you earn, your SLP tokens, what you actually make sense of it? Are you going to stake it in the excess pool, or are you going to convert it back into fiat currency? And in this case, in Philippine pesos, in Indonesia rupiah, I think that also determines the business model and the value accrual around the project itself, or or differentiate your the different guilds out there in the space.
I could not agree more. Yeah, and then you get into an even more complicated conversation around, staking is arguably in the game's benefit, right? Like that aligns your utility with the games, and do guilds ultimately want to align their utility with the games, or do they want to act in more extractionary capacity? That's definitely a bigger fish to fry there. But no, I completely agree with you, and I think these different business models wherein you see people who liquidate their on-chain holdings and move it off-chain versus DAOs who keep it all on-chain in a treasury governed by token holders. It's going to be an exciting time to be in crypto, frankly, because you're going to have a bunch of different options to choose from, and it really, really opens the door to being very creative about how you actually want to run your business model.
Right. I agree. I think even, when you take the recent happenings with Stakey, for example, again, how you sort of take your digital assets and convert it into fiat, or, to stake it further. I think that's also part of your risk management capacity, right? Or how you think about risk management. I do think that at some point you want to make sure that you hedge yourself against the risk, because again, the space is so new that even though stake ETH is one-to-one with ETH, but it takes a much longer lockup period. People may not understand that, and there's a bit of that fear and bank run situation that's happening right now. So I would say it's really about proper risk management for whatever product that you have. Might be too complicated at the start, and so really as builders, as entrepreneurs, as founders in the space itself, especially in the nascent state of your business, don't overcomplicate stuff, right? Really focus on solving a problem, building a product that solves a problem for the space. All these are just good add-on services or value-added services that I see adding on to your potential cash flow and revenue stream, right? But if you are building a product that no one uses, no matter how much you optimize for these on-chain activities, at the end of the day, it's not a product by itself. It's just you're just kind of dragging on the date cycle, in a much more longer time frame.
Yeah, I think that's a fair way to put it. And speaking even to one of your points in there around, it's confusing sometimes what a project actually has because it's too complex, and maybe some of the on-chain interactions aren't clear, and users, particularly retail, usually can't read like on-chain contracts, right? And so in my opinion, we almost have this, this duty to have standard like requirements, like our project has these features enabled, and you can see them proven here in the contract neatly on chain. So yeah, I mean, as the space evolves, that's going to be kind of where my eye is do we end up with a standard set of reporting requirements essentially that are specific to crypto?
I think it depends, but I'll sort of think about reporting requirement not just to regulators. I think a certain amount of requirement is good, right? Because it keeps the whole ecosystem in check. But at the same time, I think it's reporting requirements to the community, to the users themselves, right? Who are ultimately the beneficiaries and the users of the platform.
Agreed.
The regulators are not the user of the platform. So I think if you as a business has the onus to protect your users and your consumers, I think that reporting is really to them rather than to anyone else in the business.
I completely agree. Yeah, the projects that have radical transparency where you can like really, really see everything and understand it, I love that. I really, really like to see
Agree.
that.
Yeah.
Okay, neat. So I guess taking kind of a bigger pivot here back towards let's do gaming in particular, right? So obviously gaming blew up over the past year in many different ways, all ways you could possibly mean that word, and valuations have come down substantially, But what I've personally kind of noticed is it seems that gaming, at least amongst a lot of the other crypto sectors, does appear to be robust, versus some of these other things like DeFi yield farmers, etc. I have at least noticed personally that gaming valuation seems to have adjusted down less. What have you seen, kind of in your own personal experience?
I think two things, right? Definitely, there are some valuation adjustments because, like what we said earlier on, anyone with a pitch deck, with the word play to earn, it's able to get some, funding from the less savvy investors. Let's put it that way. And obviously, I think valuation has adjusted downwards, but I would say, two things arises from from this situation, right? One, it's gaming projects that come out of this right now and have the word play to earn to some extent, have a lot more conviction in what they're doing, right? Because the scammers of the world realize that this is not, they'll probably rotate to something else, right? Another X1 model, for example. But if you are thinking about just a gaming project in particular, I think they're getting a lot more savvy. It's really about filtering out those who are in for a long term versus those who are in for a quick flip. And so the projects that we're seeing are a lot more credible, a lot more trustworthy, and a lot more with a much stronger team at this point. That being said, I think even when you think about play to earn as like one of the byproducts of the entire Web3 gaming ecosystem itself, I think it's still a very, I think everything is still very new, and everyone's just trying to figure out like what is the right format, right? I mean, I could even slice it further into like when you think of a play to earn project itself, should I stick with a dual token economy? Should I stick with a single token economy? No one has the best formulas at this point. Even within labs right now, we are asking that question, right? What is like, having seen all these different projects, what are like some of the best standards? How do we actually help push that industry forward in a sense, advising token projects or projects who are building in the gaming space to have a better sensitivity check on their own token economic modeling, right? I think that's one part of it. Another kind of things that we see is obviously if you look at Axie Infinity, for example, they started a play to earn. That obviously catered to more towards that trader investor sort of mindset. But at the same time, they have also launched like a free to earn game, right? So I think it's really about building that ecosystem. I don't think any gaming project will survive on just one or either, right? Or rather, it survive on one or the other. But probably a fusion, a combination of both, right? You have that free to earn sort of game mechanics to cater to those who are just here to play, and you have that play to earn mechanics for those who are who wants to own the assets, who wants to do more with it, who are more of that serious investor in that project itself. So it's actually very similar to what's happening in the Web 2, and you will obviously have a better answer to this. But I think the value accrue at this point is back to the community at that play to earn space, but rather than the publishers of the world. I think that's really the biggest differentiator. I think a lot of things we're seeing in the Web 2 world can be potentially mapped into the Web 3 world, and there are correlations in that sense. Right, just that instead of that value accrual going back to that few centralized body, that value accrual actually goes to a more decentralized ecosystem communities, the one who actually believe in the project itself and wants to invest alongside it.
I could not agree more. And it's, it's a really, really careful consideration around utility alignment, right? And how compensation is, created within the environment. Because if you have some of these really big companies, I'll pick on Roblox for no particular reason, but right, like they have reasonably good splits to creators-ish versus some other environments. But the fact of the matter is that they still have like a very large corporate structuring on top, which is paid out in cash. So they have to take cash, and that is their utility. Whereas, token projects, if you comp everyone in the token of the native ecosystem, you end up potentially with better alignment. But obviously, there are some issues around cash flow in that model. So yeah, it's a sticky question, and I don't think that we have the right answer either. I'll be putting out a piece next week, actually, Shaun, on exactly this. So hopefully that'll be fun for you to read. But no, awesome. It's a fascinating topic, and I'm also ecstatic to hear you chatting around economics, right? Like focusing on economic modeling, making sure that your system, your core loop, is not completely busted out of the gate. To be honest.
Yes, I think it's very important to make sure that as a game, as a project itself, you are ensuring that the whole ecosystem you are building has a net positive gain on the entire project itself, right? I think a lot of things that we are seeing right now, I mean, even we take a very simple concept of a token sink, internal token sinks obviously becomes that vicious cycle downwards where there's really no additional value accrue, and you end up having a project with a depreciating sort of crypto asset price. But what is that kind of external token sinks we can think about? I think that's where partnerships and all come in. I think it's really about building an ecosystem, not just building a project itself that will make a big difference and discern or determine who are the winners versus the losers in the space in the long run.
I could not be more aligned on that. I can't wait till we both start deploying projects next to each other. It's going to be a ton of fun.
That'll be fun, yeah.
All right, so I've got two last questions here for you. The first is going to be another tricky one, and I'm not sure that anyone has a good answer to this, but it's, how do you value governance within a project? Okay, a lot of projects say that they have, one form of governance or another, and I've written semi-extensively on the topic and the differentiators between the two, but, in your mind, what do you see as actually bringing value in a governance structure, and how do you even reflect that in a token valuation itself?
You're right. I think it's a very tricky question. And I think even when you take governance, voting and stuff at this point in time, even the standard way of doing it is also not exactly, optimized, right? I mean, there are obviously, I think, even when you take off-chain governance voting, for example, we are betting on the fact that the projects will eventually implement it, and obviously you can see it on-chain, but it's also like a bet on the team itself. And I think that's where, the bad projects will rock at the end of the day. So I think to your question of what is that, I would say that maybe to sort of rephrase it like that gold standard of governance, value accrue on that front. I think obviously, I think going back to basics, the point of having a governance voting mechanism is that decisions are not made within a few selected parties, right? And and this sort of setup allows people who owns a part of it um, to make a vote, but that by itself is also not perfect, right? I think you take the recent saga of So for example, right? A single will voter in that sense could flip the coin, in his or her direction, depending on just on the fact that he or she has a much larger equity or governance in that whole equation itself. So that itself is also not perfect. So I would say it's really about, and I think we have also seen different projects where governance is not made on a more on just on a flat playing field, right? There are different governance for different, I would say, departments or different teams based on their strength. So it could be governance voting on the finance department itself, on the product department, on the marketing department. So every sort of department is sort of decided by who is the best person to make a decision. I think that's a very important sort of direction to distinction to have. And I think we are seeing what works right now in terms of mental model is not to go with a decentralized like a DAO straight away, because this gets very messy over time. But having a centralized team that's increasingly going down that pseudo decentralized route, eventually going into a DAO format. I think those kind of format where you sort of have a much more methodical approach towards decentralizing organization, not from day one, but eventually, and having a clear roadmap to it. I think those will be the stronger companies that emerge down the road. Because at the end of the day, it's really about building products, about building a problem, building a solution for a problem that you see in the space. Whether is it building a product in a decentralized manner or a centralized manner, I think that's really not the point. That should be where the value accrual is, right? So the value accrual, again, going back to where the money is, should be back on the product itself, not on like whether it's fully decentralized governance voting versus a pseudo governance voting and stuff. I'm not sure if that answered your question. Probably could make it more succinct down the road, but yeah, I think it's definitely a good question to think about.
That's okay, Shaun. It was an impossible question for the record, and I think you gave a great answer. Yeah, I mean, to kind of build off where you were going with that, us discussing whether or not it should be a pure on-chain system or a pure off-chain system, I don't want to say that it's like choosing between an LLC or a C corp, but it's like somewhere in there, right? It's like you're building some form of governance around a product, and at the end of the day, if the product sucks, well, the whole entity sucks, right? And that's that's kind of where it heads to. So no, I am curious to see where it all pans out, because this idea that a user is actually the on-chain governor who does execute the transactions and does change the protocol doesn't exist anywhere in Web 2. And it's a fundamental paradigm shift, frankly, that we have certainly not seen the full results of it yet, and we won't for some period of time.
Right. Yep. I mean, the closest comparison in the Web 2 world is probably if you are really, really vested in the project itself. You submit an application, you get into a company, you make changes in it. So in some way, I think going back to where we are saying, right, I think a lot of things that's happening in Web 2 can be sort of mapped in Web 3 in a more decentralized manner. So how that employment, how that conversation happens, how that decision making happens in Web 2, I think we are seeing some part of it in Web 3. And I think that's where, as with everything in history, right, I think it's always sort of like there are some correlations and there are some like case studies that we can, or precedent that happened before. So I feel like we could probably map it to what has happened in the past and see how that sort of worked out down the road.
Yeah, and frankly, if anyone watching this finds any good examples of that, please send them in, because I think that they certainly exist somewhere, and we definitely should give them a study. Shaun,
Makes sense.
I have just one last broad question for you here, and you as someone you build across the space, right? You guys are constructing a ton of different things. What kind of advice do you have for new founders, people who are just now getting into crypto and they're starting to consider, how they should value their ideas, how they should, value their projects? What would you, kind of tell them to think about?
I think going back to basics, keep it simple, right? End of the day, like what we are saying for the past, I think 30 minutes or so, if the product that you are building is not solving an acute problem for your users, I think regardless of whether you are, leveraging on Web 2 or Web 3, doesn't really matter, right? Technologies. I think that's really not the point. It's really about how do you actually, uh, build a product that people want to use. And I think Web 3 has the right sort of infrastructure that helps you accelerate your business model going forward. But it shouldn't be like, I want to build a product for Web 3. So I think it's always a question of, are you building a product in Web 3? Are you building a product for Web 3? Right? I think that's two very different questions and two very different answers that will come out of it. I think you really have to figure out like what problems are you solving and how can Web 3 infrastructure and technology actually help you solve that problem in a much more efficient manner.
I think that is a wise take. I like that one, Shaun. All right, guys. So let's wrap up here just in the last minute. Is there anything that you want the viewers to know? Any particular items that you want to drop?
Well, I think I think it's been great chatting, Sam. Would love to chat more on this games and tokens going forward. But if you guys are interested, follow me on Twitter at Shaun Heng CJ. Yeah,
His
and
link will
yeah, you
be
can
in the
find me over
description
there.
of this video. Yeah.
Sounds good.
All right, Shaun. Well, look, thanks a ton for coming out. This has been a load of fun, and we can't wait to have you back on.
Sounds good, Sam.
All right. See ya.
Thank you. Thanks for having me. All right. Take care. Bye bye.